Hello everyone, welcome to the FinLearn Academy and Embedded Software. In the series of Market Decoded, we will see how week was and what are the key levels for a coming week. So this week has started on a positive note. It has did quite well in the initial part of a week, but in the latter part of the week, we have seen a strong reactions coming in. So on a week-on-week basis, index has closed just by the 0.5 percentage we can say, but just looking at the past two trading sessions, it was collectively near about by a 2 percentage fall that we have witnessed. So this all reactions is happening from the key level. Of course, the 16,700, one of the round figure psychology we can say. And besides that, if we put a Fibonacci extensions through its initial powerful move, so this is what the 3 points that we are considering for the extension purpose. So initially prices has kept on resistance at a 16,000 level for 2 months. Thereafter we have seen the breakout, and this all the way breakout led to the 138.2 retracements level, and from that we are seeing some sorts of reactions. But in a bullish trend, just having the reactions is not enough to call for that this is a reversal sign and a negative momentum can resume. In a positive trend, the negativity can get resumed once we are at a reactions level, and from the reactions level, the reactions are have that much kind of the strength to pierce out the immediate support levels. So till now, we have seen the reactions from the Fibonacci extensions levels, but from a price action perspective, none of the support level got breached yet. So immediate support level, we can say that this is what closing means prices has made it's in a recent low right now on a Friday that was in a near about by 16,350 is an immediate support level we can say. Breach below this level we can understand that there can be a certain kind of the more negativity or kind of the extension of a corrective fall we can say. And 16,000 level remains a very good and strong level for the short term trading perspective we can say. The engine of the market, that is in a Nifty Bank has performed on the negative side. On a week basis, it is down by near about by 3 percentage, and secondly it has been into the consolidation patch. So this is what the broader consolidation patch that we are seeing. It has given the downward momentum, and maybe means in a consolidation patch, this is what the format that means after testing the upper band, it travels to the lower band. So there can be a little bit more pain on the banking stocks we can say, and its repercussion effect we can see in the broader market as well. Some of the sector wise if we see, so in this week the weak performance we have seen in metal stocks, PSU stocks, metal stocks has been media stock has been under the negative momentum, reality stocks. So these are the five major sectors we have seen on the negative momentum. CPSC they have also given certain kind of the negative structures on the chart, whereas the performing sector if we see, so FMCG and IT and consumers is the one which has ended on the positive note, but rest of the other sectors has ended on the negative side. FMCG sector has given a very good amount of the breakout we can see. From a sector specific means, let's say if any kind of extension of a retracement happens, so where we can look for opportunity or how much time we need to wait for that. So for that purpose, let's say first of all we are paying an eye on the Nifty metals which had a dream run, but in past week it has given a huge amount of the declining momentum. So in this year, the move that we normally try to observe, this index has did quite well. So on much of the occasions, it has fallen near about by 13% around 13 to 14% we can say. So 13%, 14%, 11%, 12%. So we can understand that this is what the broader intensity of the fall that has remained during this time, and maximum intensity was near about 18%. Till now, the prices has fallen near about by 10 percentage. So based on the average of my previous intensity of the fall, we can say that there can be a more pain near about 3 to 4 percentage on the index, and then of course within a due confirmations we can look for some sorts of buy opportunity. By the same time, the Nifty reality sector, which has given a very structural change on its chart, came out from a long consolidation patch or consolidation patch of 10 years we can say. So this is a very structural positive development we can say, but of course means before the smooth patch we have to go through the rough patch. So we have seen some sorts of declining momentum right now. But if we look at the previous falls as well, so 15%, near about 15%, 15%, 18%. So this kinds of the fall has happened. So based on the historical falls, we can make a one bracket That means this is what the 3 to means 15 to 18% kind of the fall it has gone through, and then afterwards it has come out within some sorts of good opportunity. So till now in a reality stocks we have seen the 12% kind of corrections. We need to wait for near about 3 to 4 percentage, and once the price settles down over there and starts to pick up this momentum, so this will be good entry levels in a reality sectors we can also say. So these are the certain kind of insights from the Nifty, Bank Nifty, reality stocks, metal stocks we have discussed. So just to sum up the things, in a Nifty, we are into the things is under the positive trend, but as of now, the corrective patch is likely to unfold. We have seen the 2 days declining momentum. It may extend because of banking stock which is under the pressure. So 16,600 level is an immediate support level for it, and fresh momentum we can expect once 16,700 level taken out on the high side, and then afterwards beyond the 16,700 level, the next immediate hurdle we can have is a very strong psychological figure, that is a 17,000 level. Whatever the discussions that we did, that is for the educational purpose only. Thank you so much.